Hey guys, welcome back to another video. Today we'll be taking a look at Salesforce. So as always with the overview, I want to start off with the PE ratio. So currently it's at a 126.04, which is not the best thing to see starting off, as this may be a big indicator of it being overbought. You typically want to see this number be around 20 or less. Then with the dividends, they currently don't offer any, which is definitely okay. It just seems like they'd rather reinvest the money back into the company. Before we look at the income statement, I want to see what their gross margin and return on invested capital is. So right now, the gross margin's at 67%, which is good because the lowest you want this number to be is 20%. Then with the return on invested capital, it's looking decent at 9.42%, as you want this to be at 7% and above. Getting into the income statement, we're going to start off by looking at the revenue. So as in the most recent year, they're bringing in 21.25 billion. So this is up roughly 12.86 billion from 5 years ago, so this is great to see. They've been extremely consistent with this even through 2020, which a lot of companies struggle with. Now taking a look at their net income. So it looks nearly as good as the revenue. The only negative thing I have to say about this is it did have a big dip in 2020, but they have made a huge comeback the next year with it being grown to 4.07 billion. Now, the last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. As you can see, it's looking pretty bad. Overall, they have brought it up from 687 million to 908 million. Moving into the balance sheet now, we're going to start off with the current assets. So the current asset growth looks good as they've brought this up to 20.74 billion, which is an increase of 265% from 5 years ago. Now with the current liabilities on the other hand, as of 2021, they're at 17.73 billion, which is great to see as they have 3 billion more current assets than current liabilities. The last and one of the most important aspects to look at in any company is the free cash flow. So cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends, so this is clearly something you need to see be improved on year after year. As you can see, it's looking very good. They've been consistently growing this every year and have made it all the way up to 4.92 billion. In conclusion, Salesforce has some surprisingly really good financials. I honestly never really looked into this company, so it's always fun finding a hidden gem like this. Some criticism I do have is I want to see them start buying back shares in the near future. So when it comes to buying the stock, I don't think it'd be worth a buy if it's trading over $200. Their PE ratio is extremely high, which I did say earlier is a sign of it being very overbought right now. So hopefully if it does drop down, I would definitely be interested. So two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I'm not a financial advisor. I am just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.